Well, hello there, Maverick Currency traders. This is Rob Reinhold, and I am flying solo this week. Mr. Sharma is out on vacation, so you're going to just have to hear my opinion this week. In this session, we're going to be talking about what happened last week. A ton of news this last week, and we have a ton of news coming up. We're going to look at all the markets, score everything from a +3 to a -3, and then we're going to take the strongest currencies, put them up against the weakest. That's going to be our focus for the week. That's where we're going to hunt.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
As I said, we had a ton of news last week, and let's first talk about the equity markets. Now, when we take a look at the end numbers for the equity markets, they weren't terrible, but boy, there were a few terrible days in here, and the tech stocks are in absolute freefall. We are now at about a 10% pullback on the Qs, the NASDAQ 100, over the last 3 weeks. That's a big move, and the biggest move we've seen in a very long time. However, under the surface, we've been talking about this, the regular stock market, and again, I don't even know what you call the regular stock market. We'll take a look at some charts, but the regular stock market is doing fine. It's pulling back 1 to 2%, but it's really the big winners of the year. They're getting absolutely hammered, and they are such a big part of the S&P. 7 stocks make up 31% of the S&P, and all 7 of those are deeply out of favor right now. So we're having a big risk-off move. We also heard from the Bank of Canada last week. The Canadian dollar has been sliding in anticipation of a rate cut. The Bank of Canada gave the rate cut the market was expecting, but they hinted that there's several more rate cuts in the future. The CAD is definitely looking weak. It's looked weak, and it's still looking weak. And then the big story this week in the currency market was the yen. The yen has spiked. Remember, the yen had been going down pretty much every day for the entire year. It had just been hammered and hammered and hammered. The Bank of Japan had come in and intervened a few times. But what really got the yen moving is this panic and this fear that's happening in the stock market. That's caused a lot of people to go ahead and close their yen shorts. There's also expectations the Bank of Japan is going to raise rates this meeting, which is this week. It's on Tuesday night. So look, a lot of things happening. The yen was deeply oversold. There's a big squeeze going on. I've been saying when it's all over, I think the yen's going to be a good short, but I've also been saying it's not over yet. I still am in the same boat. I think the yen is not over yet, but with the Bank of Japan on Tuesday night, I think that might be the turning point. So I'm not looking to short yen yet, but I think after the BOJ, I think we're going to take a look at it, and it might be a pretty good trade after all. As far as what happened on the calendar, we got European Services PMI. You can see that they were pretty much weaker than expectations, except for France. France was a little bit bigger. The UK was a little bit higher than expectations. And then after that, I really want to take a look at US data. US data was really pretty good this week. This advanced GDP report was like the perfect report for the market. Remember where the market is. The market wants a good economy but falling inflation. This advanced GDP report way stronger than expected, but inside that report, the inflation numbers way less than expected. This is everything the market wanted, and the market rallied on Thursday in the morning, but by the end of the day, everything had rolled over and died, and we plunged on Thursday, and we closed at our lows. Then we got the core PCE price index on Friday, came in as expected. The market liked that. We got a little bit of a bounce back on Friday, but we'll take a look at the charts. There is nothing yet that's saying that this market has bottomed. There are a few little things that said, okay, it might be bottoming, but there's no confirmation yet on this market, this equity market, being bottomed out at all. Let's take a look at the actual numbers, how the whole week ended up. If we take a look at the S&P, it was down 0.8%. That's not a big deal. I threw up the Qs. Usually we take a look at the world market, but I wanted to just show you the Qs was down 3%, and the Qs bounced back 1% on Friday. So at one point, Qs were down about 4% for the week. That's a really big move following about a 4% drop last week as well. Cryptos, they headed lower. We're going to take a look at those. I think Bitcoin looks fantastic. I think everything else looks like trash. And then you can see gold and oil, they've just been really hanging out in the same areas here. I want to spend some time here on the chart. So here is the S&P. You can see that this S&P has pulled back, and we pulled back. We broke through the 20. That was our first downgrade of a +3 market. We went from a +2 to a +1, and now we have gone below the 50, but look, we recovered. If you listened to my session on Thursday, I talked about how if this was a better candle, if this was like a hammer candle or some engulfing candle or something, it would be a sign that the market has bottomed. The fact that we rallied all the way up to this point and then by the end of the day had fallen all the way back down was not a good sign that the market wants to hold on. Then we get this candle. Okay, it's a green candle. That's a positive. All of this stuff is happening at support, but I really want to focus on the long upper shadows. You don't want long upper shadows. You want long lower shadows. You want it when the market is falling and panicked, a bunch of people come in to buy. You're getting the opposite. You're getting when it rallies up, a bunch of people are selling. This is not great price action. Now, what I want to focus on is this is the S&P. And remember, 31% of the S&P is the tech stocks, is the Magnificent 7 tech stocks. Let's take a look at some other charts just so we can show you that it's not that bad. The NASDAQ looks horrible. We'll take a look at the NASDAQ first. So here is the NASDAQ, and you can see we gapped and plunged through the 20. We gapped, plunged through the 50. You can see the NASDAQ is deeply in trouble technically. I mean, and take a look at these candles. This candle on Thursday, that's a continuation candle. Okay, we have a doji. That's all you can say is we have a doji. If Monday can be a big fat green candle that closes at the high, you might be able to say technically, okay, that was likely a swing low, and we're probably going to bounce up, maybe up to the 50 before we turn back down. This chart looks atrocious. But then I want to take a look at something like the RSP. This is the equal weighted S&P 500. So basically, instead of those 7 stocks making up such a big deal, they equally weight all the stocks. And you can see, hey, this looks good. This is a good looking chart. New swing high, and we've had an orderly pullback. And this candle right here, hey, that's a solid candle. This is a good looking bounce here. These are the kind of trades I love that we have. This market had a breakout, it came back down, tested support, and here we are. Everything looks great on this. Let's take a look at the Russell 2000. And you're going to see Russell 2000 is even better. This is a high base, and it looks like it wants to break out and run. I'm showing you all these things. I'm spending a lot of time on this because I don't want anyone to just look at these, the NASDAQ and feel the panic. The underlying market is doing okay. I think that we are close to a bounce. And frankly, it's dumb to say that because look, the S&P and the Russell 2000, they're already bouncing. They're already moving. They're already going up. It's the tech stocks that are going to be dragging things down until they recover. I do think there's a bounce fairly close in equities. I think we are going to see an upward move somewhere in the next week or two, but I don't think we're done yet. I think those tech stocks, and again, let me just pull up that Q. Let me pull up those Qs. This is just a bad looking chart. This bounce here is really, really weak, and we probably have a little bit more to go. I know I spend a lot of time on that, but I think this is a very noteworthy discussion that we're having here, just so you understand what is going on in the equity market. In the currency market, it's a straight up risk off move. We've got weak growth currencies, strong currencies of safety, and the euro and pound are in the middle. This is textbook risk off move. This is likely to stay this way until we get the market not just bottomed out, but stabilized. We did get a little bit of a bounce on Friday, and we're going to look at the charts on the Aussie and Kiwi. You're going to see that they had really weak bounces. If we take a look at the rest of the markets, here's crypto. Bitcoin flat for the week. That's a win. That's a huge win. Everything else got absolutely hammered. So we are at a 0 on the S&P. Like I said, there's no question the Nasdaq's at like a -2, -3. Small caps are like at a +2. So the rest of the market we're just going to put here at a 0. Let's take a look at interest rates. Interest rates had a little bounce, and you can see they rolled right back over. And we're now back down below the support point at 4.2%. If this goes lower, we should see the dollar start to come under a little bit of pressure. Now remember, just because interest rates are going lower in the US, the question is, what's the rate? How much lower are they going compared to other countries? When we take a look at something like the Canadian dollar, those interest rates are coming down much faster. So interest rates around the world are coming down faster. The question is, who is actually seeing the worst of it? And then up next is the crypto basket chart. And I like this one. This is a good candle. Now, this is what you want to see. This is a good bounce. We had a long lower shadow. We broke through that moving average, recovered above it. And then this candle, we opened up and we bought all day long. This is a good set of technicals for a bounce. What we saw on the S&P and the Nasdaq is garbage. It's not saying it's a good bounce. This is a good bounce. I do like, again, this. I'm going to say the cryptos. This is the whole basket, but really, we'll take a look at all the cryptos. You're going to see Bitcoin is the only one driving that higher, and Bitcoin looks great. Next week is bananas. It is bonkers. We have so much news coming out on Tuesday morning. So Monday is going to be chill. There's nothing Monday, Sunday. So we're still going to get probably good price action because the volatility is high in the markets. On Tuesday, we get Australian CPI. The Australian dollar had a really nice bounce about 2 months ago from when the RBA came out and was more hawkish than the market expected. If this CPI comes out weaker than expected, they're going to do just what the RBNZ did about 2 weeks ago that really killed the Kiwi, is they came out very dovish. I think this is a big report. If you're trading Aussie, I think you need to be watching that. And then you got Chinese manufacturing right at the same time. I think 9:30 on Tuesday night, great time to trade. And then right around that time is the Bank of Japan. Now, the Bank of Japan doesn't have a time that they release it. They just say it's around, we're going to release it this night. Most of the time, again, this is just off of personal experience, the report comes out just before midnight Eastern. Just before midnight Eastern. So it's like, 11:40, 11:45, somewhere in that area. But I've seen it be as early as, 11 p.m. Eastern time, and I've seen it as late as 1 a.m. Eastern time. Somewhere in that area, they're going to announce this is a big deal. They are expecting a rise in interest rates. Is that already priced in the yen? I think it is. I think this is going to be a sell the news. I like yen short after this, especially if we get a little pop. I like it even more. We'll be waiting on that one when it comes. We also have Canadian GDP on Wednesday, and then Wednesday we have our second central bank. We have the FOMC statement. They are not expected to cut rates. I personally think they're going to cut rates. The market does not agree with me. And guess what? If I'm a true betting man, I'm going to place my bets with what the market thinks, not what I think. Why is that? Because I'm one person. I've got tons of biases. I've got my own little thoughts. The market is collectively betting that there is not going to be a rate cut. So if there is a rate cut, it is going to be a surprise. So expect that to affect the dollar, probably on the downside, but not too much, because remember, there's like a 95% chance they cut next meeting. So if they cut this meeting, all it does is say, oh, they're not going to cut next meeting now. Do you see that you got the cut within just 6 weeks early? It's not really going to change the dynamic of the dollar all that much. Now at the press conference, that's going to be the thing you need to watch out for, because if they come out and they say, hey, we're going to cut a little bit more in September, or we're going to cut in November, all of a sudden that's more than the market expects, and that's going to be the move. So I don't think the move comes from the rate statement. I think the move comes from the press conference after, if there is a move. Our third central bank is on Thursday morning. Bank of England, they are looking to cut rates as well. It'll be interesting to see what they say, because of all of the countries, they have inflation that hasn't come down as much as others. And their growth, which was pretty bad over the last 12 months, is actually now starting to look pretty good. I think this is also a report. If you're trading the pound, I think this could be one that I actually think the pound could go higher off this, especially if they come out and say, hey, we're cutting rates, but don't expect any more after this. I think the pound could strengthen. Then on Friday, we got CPI out of Switzerland. And then we have jobs report. That is a lot of stuff. There's a lot of stuff going on this week. This week should be one of the best trading weeks of the entire year. So get ready. There's going to be lots of opportunity. If you miss one, don't even cry about it. Don't even worry about it, because this week is stacked up with tons of movement, tons of momentum. All right, let's go in and score everything. And again, we're going to take the strongest, pit it up against the weakest. That's where we're going to be hunting for our trades. First up, crypto. I'm going to spend some good time on Bitcoin here because it's the only one I like. Look at this. It's a +2 on a trend score, +3 on velocity score. This looks great. Remember what I was looking for when crypto was in free fall, and then we had this bottom. I said I need to see a higher swing high, which we got here, and then I needed to see a pullback, and then I needed to see a break higher. Hey, we got everything we asked for. Now we got a pullback. And again, this is what you like to see on pullbacks. This is a good chart pattern for candlesticks. We have the hammer pattern all the way down to a moving average, touches that, rockets higher, followed by a big, thick green, open at the low, close at the high candle. Everything looks great about this. I think Bitcoin is a buy here. It is going to probably run up to 71,000, where there is major, major, major resistance. But remember, the more times something touches resistance, the more likely it is to break out. I have no idea if it breaks out this time, but it's got a lot of momentum. Looks good. I do think that the equity markets have to bounce in order to give Bitcoin enough momentum to break out to the upside. If the equity markets have a really strong bounce next week, I think you could see Bitcoin break out to new highs. If the market doesn't, if the market struggles, then I think Bitcoin's probably going to struggle and stay here between the 64,000 and 70,000 at the top end. So it really is counting on, at least for me, I'm counting on the equity markets having a bounce if I'm going to be long Bitcoin. Everything else, garbage. Completely ignore it. Bitcoin Cash, not good. Ethereum looks the worst of all of them. Ethereum's at a -1 on the trend score. And we've got Litecoin as 0. There is no reason at all to look anywhere else outside of Bitcoin. In the Forex world, dollar is sideways. Okay, that's all we can say. It's sideways. It's up near the higher end of its range. So could you look for a possible short here? Yes, but take a look at where it is right now. It's still marching up. You don't want to short something that is going right against you. That's not how momentum trading works. You want to wait for it to hit this area, have a couple candles to the downside, but it's not going to be a great trade. I am very interested in trading dollar. It is not even on my scope here. It's not even on my radar. I'm just forgetting it for the moment. What is on my scope is yen. Yen is a +3. But look at the velocity, -2. So we've had 2 candles here where we've run and struggled. This is what you like to see on topping action, is you like to see this kind of stuff. It's just like the opposite of what I told you on looking for bottoms. We got a shooting star candle. However, the next candle, you can't say it's a good candle. This is not a great candle. So for the moment, this is still going higher. I don't think you can touch this until after the Bank of Japan, but once it breaks, I'm going to be looking for yen short off of a sell the news off of the Bank of Japan. But I need candles. I need candles to show me that it's really broken. I'm not going to be the first one in there. When the news comes out Tuesday night, I might not take this trade till Thursday or Friday because I want some real good confirmation that it has broken. Look, there's a ton of give back on this rally. I mean, we could just lose half of it, and that would just be a great trade. Swiss franc also has had a nice run. Not as big as the yen, but it's had a nice run. This has been off of risk off move. The yen is a very tricky play here. And look, I totally understand if someone says, I don't want to mess with yen. I agree. It's a tricky trade. This is probably a more simple trade. This is simply risk on, risk off at the moment. If the equity markets bounce, this will sell off. But if the equity markets keep falling, I think this continues to go up. Take a look at it. +3 trend score and -3 velocity score. It's pulling back right now. But if we get more weakness next week, I think you want to be long Swiss franc. Euro. Look, I've liked Euro. The problem is it's not exciting. It's not really going anywhere. All it's doing is staying strong, but it's not getting stronger. It's a trade you can make. I don't love it. I've been disappointed by it. I've been thinking it was going to get stronger, but it just, look, it's strong. It's holding its strength, but it's not getting any stronger. That's all I can say about Euro. So how about I go look for something else? And speaking of something else, here's another European currency. This is a beautiful high base forming. We've got a nice high base forming into a Bank of England report. Look, this thing's either going to break to the upside or it's going to break to the downside. I'm not going to be interested on a break to the downside, but a break to the upside, I will absolutely be looking to trade pound. It has a good momentum score right now. It's in the bottom end of the base. One of the things I like to do is take a small position at the bottom of the base so that if it does break out, I've already got a half position, a third position, and then I can add into my position if we get a breakout. Something that you could take a look at for the pound. On the growth currencies, they all look like sells. -3 for Canadian dollar. It's basing here. We've had about 3 days of basing right at this support. It's holding on. I think we probably see a breakdown this week, but only on equity market weakness. If we get a bounce, we probably hold these levels or have a little bounce on all of the growth currencies. And you can see that's what happened on Friday. We had bounces. Here's again a candle pattern. Nice long lower shadow, but look at that next candle. That's garbage. We lost over half of the gain it had during that day. So for me, the Aussie is a great short. Here's the problem. It's at a +2 velocity at the moment. So it just tells you, okay, let it have its little bounce, and then it's going to be ripe to be shorted. But here is the gem. Kiwi has lost all of its gain. So I think we have a good opportunity here for a short on Kiwi with further equity market downside. Here's our trend score, pretty clear. Yen and Swiss franc looking great. Euro and pound looking next to it. So remember, this is where we got to focus. Yen and Swiss franc are going to do best if the equity markets fall. If the equity markets rally, they're going to probably sell off. And if that's the case, euro and pound are next up on the list. I'm looking at this next week. If it's risk on, if it's a bounce, euro pound is my focus. If we keep falling, it's yen Swiss franc is my focus on the long side. I like Kiwi short in either situation. I like Kiwi short whether we bounce or not. That's how weak I think the Kiwi is at the moment. But we could rescore and take a look at other things. But this is really clear here. For right here, right now, you want to be long yen, long Swiss franc if equity markets go down, long euro, long pound if equity markets go up. And the growth currencies are really struggling here. If we do get a bounce in equities, these probably do get a bid short term, but I think that's just going to be a bounce to be able to short into them. When we move on to velocity score, I got to apologize. I did not notice that the charts were incorrect that we just looked at. The velocity score charts in the bottom were not on the correct date. They were from about a week ago. So this is the correct velocity score. We've got yen at a +3, dollar +2, euro +2, Bitcoin at +2, and then we got Kiwi at a -3. So when we take a look at, okay, what has a good trend score and a good velocity score to the upside, we answer euro and yen. Those are the two that are right here, right now. Their trends are good, and right now the velocity is good. On the downside, we've got Kiwi that's in a bad trend score and a bad velocity score. Then it's no question what we're taking a look at. We're taking a look at euro, yen on the long side along with Bitcoin, and Kiwi on the downside. So let's go take a look at some of those potential trades. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? I know I sound like a broken record, but if the markets continue to fall more, then yen is probably going to be the best currency to be long. So let's take a look at Kiwi yen. This thing is just in straight free fall. You can see it's gone down every single day. Now these are tough trades to catch because they don't give you really great opportunities. When we go into a shorter term chart, you can see that we want to take advantage of bases here. Maybe that's more of a little bear rally. But we want to take advantage of any time we get these little bases to get into some opportunities. Again, here's a 3-day base with a breakdown. Here's another 3-day base with a breakdown. Oh, sorry, this is just a 4-hour chart. So we only get a little bit of time. This to me looks like a good opportunity. It stopped following. It's rallied a little bit, but it can't really rally any further. To me, this looks like a decent setup here for a Kiwi yen short. I mean, really right where it is at this moment, 90.55. Follow your stops, wherever you put your stops, follow your position size and whatever you do. But to me, this looks good. And when you take a look at, okay, where is the likely target here? Probably somewhere down in the high 88s. So looking at something like let's just snap a line here. So yeah, probably looking down to a 88, let's call it 88.80, I think is about as optimistic as I want to get on this. That's 70 pips on a 90-cent currency. That's looking at about 0.8%. That's a nice move in this one. If you think that the equity markets might rally, then I think you want to be taking a look at Euro Kiwi. So Euro Kiwi on the daily chart looks the same. It's just a rocket ship. It's not really having any pullbacks whatsoever. So we go into a shorter term chart and we just say, hey, We want bases, pullbacks. These are our entry points on this. And you can see we got a nice base. We take a look at where is the entry point, 184.50. 184.50 right here above this. I think that is the buy point. And of course, wherever you put your stops, follow it up with your position management. And last one I want to take a look at is Bitcoin. I am not interested in any other cryptos whatsoever, but I am interested in Bitcoin here. We have some major resistance up here at all-time highs, right at 72,000. At this point, it's the same thing. We've got our nice daily chart. It looks like it wants to run and likely put in another swing high. Probably going to be right around the 71,000 area. What we do is we go into a shorter term chart and say, okay, where's a better entry point than just buying it right here, right now? You can see we've had a bounce up. We got a red candle here. I'm very happy to let this thing work down into this area of support. Would love to put an alert somewhere around the 66,500 area, 66,500. If we can get some nice bottoming action and then a candle or two green off of that, I think that is a decent setup here for Bitcoin, and then a potential run up to the 71,000 area. This week is a busy week, so I don't want anybody to get like really hemmed in with their outlook. Be fluid. We just broke down this is where the market's going to start on Sunday, Monday. Look, things are going to change. We have 3 central banks. We have a ton of economic data. This is going to be a really good week for trading. Remember, at Maverick, we want to adjust our volume of trading with volatility. Higher volatility, we want to be more active as traders. Lower volatility, we want to be less active, like hibernating, to where we don't do anything unless it's really great. If you can do that well in your career, you're going to avoid those dull markets where you chop your count up a lot and get up behind the 8 ball. Adjust your trades based on the volatility of the market. I think the tech stocks stay under pressure. I think the equity markets, as far as the S&P and the Qs, probably have some more downside left in them. I don't really like the bouncing action in them. Not all that impressed. Likely to go lower. The question is, what happens with the rest of the market? Does the rest of the market save it, or does it pull the rest of the market down with it? Well, I'll have to wait and see. 3 central banks this week. Lots of news out there. And I think the story is Aussie, Kiwi, likely going to stay weak. Everyone have a great weekend, and let's show up next week to make some pips. Goodbye, everybody.